Good morning and welcome to Your Successful Retirement TV. My name is Cynthia DeFazio and I am joined today by Misha Dagher of Dagher Financial LLC. Misha, good morning. How are you this week?
Good morning, Cynthia. I'm very good. Nice to be back with you on the same show.
It is so nice. It's always such a pleasure. And again, we've talked during the past few weeks about hopefully one day being in the same location. Because to the viewing audience, they're probably wondering why they're seeing two screens. It's because we are in separate locations due to COVID-19. So, Misha, I can't wait until we're actually in one studio setting together.
I know. I understand some other people are been now since, there is a little of ease with the COVID-19 currently. But since technology is allowing us to do such things with keep safety, so that will encourage other people if they can do so. And keep their lifestyle, but keep the social distancing, just because that's mostly advice, that will be great.
I agree, Misha, absolutely. I want to ask you, because you're such an amazingly gifted retirement planner, if you will, financial advisor, what can you share with the viewing audience? What has changed as far as the trajectory of retirement due to COVID-19? Have you seen any shifts in your world whatsoever?
We start seeing concerns. We can't 100% finalize whether it's going to leave a big impact, but I believe it will. Not much of statistics yet set in stone to go by on how it's affecting the near future retirees, but I believe it is going to affect a lot of them. One concern we've had, and I've had faced with other callers, that they are let go, or just their jobs are ended because of the COVID-19 and the pandemic, and they are within that retirement age. With that being said, it's very hard and difficult for them to go back to the workforce, especially when we have the higher unemployment numbers. Now, of course, it's because of the pandemic, etc. But when this is start going down, are they going to be okay to find jobs quicker like they used to be in the past while they are in that age of retirement? So they are mostly kind of, think about it, like forced to be retired early because of the COVID-19 now. So having also retirement accounts that they are at risk, that they are very volatile, it's a lot of concern.
Sure.
Other facts we have to face is that these retirees mostly don't have pensions anymore, because unfortunately, defined benefit plan had been replaced mostly with the defined contribution plans, such as 401k and 403b and 457, etc. So with that being said, now people are, okay, I just have that fixed income coming from Social Security only. So I am not going to actually have also a pension, but I'm gonna count on my savings, on my retirement accounts to provide me the additional income, but yet we are in pandemic. So the accounts are volatile. They have so much of questions, and working with a professional is the best at this time, because we have so much of unprecedented time right now. We don't know much. Basically, what we know about this pandemic is we don't know anything.
Right. Right. And it came to us like just out of the blue. Everything had been going really, really well. And then it seemed like everything just stopped, almost frozen in time. And so it has changed so much. So I wanted to ask you, Misha, are you seeing just a lot of people calling you and just checking in to say, Misha, I see what's going on in the market right now. Am I okay? Is my retirement safe? Are you getting quite a few calls like that?
From my current clients,
yes.
We are so upfront with our clients. We don't wait until they call us. We have periodic reviews with our clients. When we were going through this pandemic, through all the months, starting in actually mid of February, before we start in Massachusetts having the stay-home advisory, etc., in March, we were calling our clients, leaving message, sending the market updates on a weekly basis, calling them, and we're still doing so. We're having so much of reviews with the clients, and we explain their current situation. People panicked in March a lot because of Monday, March 23rd, when the Dow Jones went down over 35% for the year to date. So that was really questionable for a lot of people. But our clients, they were in a stage of mind that they're fearless because they're fine. They knew, they reviewed the accounts with us. We've called them, we've already sent them what their situation is and left them a message or voicemails if they did not answer. So if they are, looking for a clarification or any of such sort kind of explanation, to give us a call. So we are very blessed. I can't complain about that because actually, no, we did not have many calls from our clients. We've had so many calls from others, referrals coming from our clients because they were at the stage of mind that they are so relieved that all this pandemic did not affect their retirement plannings. And because we verify with them, we have written financial plannings with them. We review periodically. So they talk about us to their neighbors, to their cousins, to their friends. And the word of mouth was really great during that period for us.
Somehow I knew that was going to be your answer because I've heard from so many people that are part of your client base now just how much the communication means to them. They feel like you really make them a priority, not just when they're sitting with you, but just from the periodic emails or the phone calls when you check in. So I asked that question, but I kind of knew what your response was going to be. Communication is always so important. And so that brings about a really good question, actually. It really is. So how often are you checking in? I mean, is it like every 3 months? Is it every 6 months? I mean, what would you say the average would be, Misha?
So we have the rule of thumb, let's call it. We offer a quarterly reviews with our clients, and we have a set stone situation. So basically they don't leave our offices before they schedule their follow-up. And we make sure they're on our calendar. Well, we know 3 months from now they might not be available on that day, but believe it or not, we really rarely have cancellations or rescheduling because they look forward to see us as much as I look forward to see them. Some people, they elect to go like on a 3 months phone appointment and then 6 months in office, especially if they are the people that go to North Carolina or South Carolina or Florida or any place, New Hampshire, even though we have another location in Burlington, they tend to like skip sometimes on those and do phone calls review versus in-office review. Now, a lot of people during this pandemic and the COVID-19, they really appreciated the Zoom meeting and the online meetings that we've had. And we kept this touch and I love it. And some of them were like, yeah, can you keep offering the online review if there is a snowstorm or, if we are away and we cannot drive to your office. So it's nice to have that.
Absolutely. And I think it's so funny because I'm finally getting more and more comfortable with the Zoom. And by the time I'm really comfortable with it, we're going to be back to just things being normal again. So it is amazing.
Correct. I had said to people, I had said to people that, and I actually tell clients who told me like, can we keep doing Zoom even when we go back, to some normal? I said, you know what, until I can shake hands and give hugs again, I'm fine with the Zoom meeting because it's the same. I can't even get closer to you by 6 feet, so no matter what, just seeing you by screen.
Absolutely. Well, Misha, we're about ready to open up the phone lines for the first time this week. Can you tell the viewing audience what they can expect to receive by calling in today?
Of course, we're going to offer the first 10 callers a complimentary full review of their current financial situation, which includes a customized retirement plan, also personalized Social Security timing report. So I can't wait for us to sit down with you, all the viewers. Give us a call. It's 833-365-8383.
Thank you, Misha. To the viewing audience at home, that number to call once again is 833-365-8383. We realize the phone lines have been busy, so we've added secondary phone lines this week. So once again, please keep trying to call. The number is 833-365-8383. We're going to be right back after this very short commercial break, so please stay tuned.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
And welcome back to Your Successful Retirement TV. My name is Cynthia DeFazio. I'm joined today by Misha Dagher of Dagher Financial, LLC. Misha, I wanted to talk to you a little bit more about what it feels like for someone who's approaching the retirement years. Let's say they're about 5 to 7 years out. Can you kind of give an overview of what that viewer might want to be doing today if they are watching the show?
Well, first of all, if they don't have a customized retirement planning, written plan, it's very important if they don't have a full review of what they should be expecting for fixed income during retirement, such as Social Security, pensions if they have, annuity payments. They have to figure that out. Then they have to figure out their budget or spending down amount for retirement. What's the expected amount that they're gonna have to spend during retirement? And then they have to figure out the gap, and they have to figure out the best way of doing a withdrawals from their account to minimize taxations and make sure they have already saved enough money. Well, they might be just stacking more and more and more into a qualified account that they are pre-taxed accounts, thinking that when they're gonna retire, they're gonna have a lower tax bracket. Well, a big question here for the viewer. Are you guys thinking that taxes are going down in the future? Well, if the answer is no, which you don't think that, which most of us don't, then the other follow-up question should be, then is your tax bracket during retirement is going to be the same because you're gonna be forced to take required minimum distribution based at age 72 currently based on the Secure Act of 2019? And if you are going to be withdrawing too much of required minimum distribution, that's gonna tax your Social Security up to 85%, then are you going to be in a lower tax bracket than you currently are? Well, are you considering Roth 401k? or maybe conversion of your current IRAs and 401ks accounts that you have, so you can maybe strategizing for the future what type of income you can have, and maybe most likely we can maximize tax savings as much as we possibly can. This is what they should be looking for, and we have the way of helping them like we've helped many of others.
Thank you, Misha. Can I ask you a question? How important is it to carefully select your investments as you're approaching retirement?
Very, very important. As you know, Cynthia, we've had some talks, you and I, while we're having breaks or before the show start. Well, people most often think they know their risk tolerance. They're set in stone on their risk tolerance being at certain level. We find out when we sit with them that they are totally off based on what they think they are, and secondly, based on how much risk they are taking in their current accounts. And most often, we find out that they are taking so much more risk than they can tolerate, as well as how much they can afford, or if they need to. Well, if you don't need to take the risk, why taking it? The more risk, more rewards? Maybe, but sometimes there's more losses as well in certain cases. And if you are losing in an account that you are withdrawing payments on a monthly basis from, well, you have to question then. Are you going to take a cut when that account goes down from 100 to 70 or from 100 to 80? If you're taking 5% or 4%, it's usually the rule of thumb between 4 and 5, then are you going to change that percentage to keep the same amount of dollar amount coming to you monthly? Or you're going to decide to take a haircut and decrease your spendings during retirement that you look forward to spend and enjoy? Those are big questions. Don't take risk more than you need. It's not worth it.
Misha, all incredible advice that you're sharing with the viewing audience, and that's so true, because so often we hear of people that have actually selected their investments, let's say, 10 years ago, and they forget to kind of have their portfolio rebalanced, if you will. How often do you recommend that someone actually rebalances their portfolio?
Are we talking about full portfolio or 401k that it's not actively managed by a financial advisor?
The latter of the two.
So, because it's a big difference. Well, because I believe that people should have a smart, tactical investment approach, which what we use. If you have a financial advisor that it's active on your account, well, you don't need to meet with them to change your portfolio investment based on what's happening in the market. They should take the initiative of doing so regardless to mitigate risk, so you don't lose as much as the market is losing. And that's kind of common sense. So we don't need to meet with our clients to do our job and to put their best interest first. But for the 401k, then it will be part of the question that you have. I always review the 401k choices with my clients when I see them quarterly. It's very hard to have the client themselves rebalance and look at their portfolio or their 401k while they don't have the financial backgrounds. So we really try as much as we can, and I most of the time advise, if they have a 59.5 in-service rollover, to take advantage of it and not leave their 401k at risk without an active management on it, because you can't really control what's happening in your 401k overnight most of the time. So unless you're just gonna let it be and not really touch it for a decade, then probably you can take that approach. But otherwise, you probably should look for alternatives.
Misha, thank you. What an amazing answer. We're going to open up those phone lines again, Misha, to the viewing audience at home. Can you tell them what they can expect to receive by being one of the first 10 callers today?
Of course, give us a call. We will be more than happy to review your current financial situation and offer you a complimentary appointment that will include a written retirement plan with a personalized Social Security timing report. So give us a call, 833-365-8383.
And Misha, the phone lines are lighting up. So to the viewing audience, again, that number to call is 833-365-8383. We do have to take one very short commercial break, but we're going to be right back with more questions and answers about planning your perfect stress-free retirement. Please stay tuned.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
And welcome back to Your Successful Retirement TV. My name is Cynthia DeFazio. I'm joined today by Misha Dagher of Dagher Financial LLC. And Misha, another amazing show that we've been able to give to the viewing audience today. There's a few questions that I would love to just ask you because we do have just about 5 minutes left before we have to say goodbye again this week. When people are considering how to hire a financial advisor, retirement advisor, if you will, what should they be looking for in that person?
Well, as I always say, when you go to your PCP, again, like, to get your healthcare checked, the same you go to a financial person to get your financial situation checked. So, well, if you are going to build a retirement plan, you should go to someone that is focusing on retirement plannings most of the time. So we are, we have so many of tremendous, fine financial advisors in our area. But are they really focusing on retirement plans all the time? Or they do a bit of everything? And furthermore, you have to have your financial advisor hold fiduciary and not just a financial specialist. So financial advisors usually hold the fiduciary responsibility. That means they put the best interest of the client first. And that's very important because they don't work for a company, they work for the client. And we are not biased by all means to any product or company when it comes to our plannings, because we have to put our clients first. We have to go with their needs first, and this is very important. And furthermore, insurance products are very important nowadays during planning for retirement. So what a plus for the client to have a financial advisor that holds fiduciary responsibility, yet an insurance agent licensed. So that way they can have the focus of retirement, the freedom of being put in first, them first. And third is to include long-term care plannings in their plan and health care, and as well as income for life. So all of this at one place.
Yeah.
Beside that, when you're working with a financial advisor, it will be so awesome also to have the estate planning attorney handy and the CPA handy, so they are as a group working for this client.
Absolutely. And if we have people in the viewing audience today that think that they're all set, that everything looks good for them, how important is it, Misha, to have a second opinion?
It's very, very important. The same when you go again to a doctor and they send you to a specialist because they find something wrong with you. Well, you don't go with only one specialist, you go with the second specialist to make sure. And that's why we like to call ourselves that we specialize in retirement planning.
Absolutely. And Misha, how long does a consultation typically take with you? If people are wondering how to plan their schedules, what can they expect when they make that phone call, they're being called back, and they're going to have a consultation with you?
Sure. We typically have the appointment blocked for about 2 hours, especially the initial appointment, because we really want to get to know the people and give them the chance also to get to know us. Well, also, some other clients or prospect or people that we meet for the first time, they're very well ready. They come prepared, and their appointments takes about an hour and a half top. So, we wanted to probably say between an hour to 2 hours. It depends on the situation and how many questions they have.
Okay, very, very good. And of course, they're going to ask what kind of documentation they need to bring. Is there a website that they can visit for that information, Misha?
We will be emailing them a confirmation email, and if they would like a letter by mail as well, to specify the location, address, as well as required documents and the time and the date and all the details, so they don't have to worry about it. Besides that, our team will call them in advance. We send reminders so they will know exactly what they need to do.
Misha, you're just amazing. We have about 30 seconds left of the show. Can you tell the viewing audience what they can expect to receive by calling in today?
Sure, we would love to give them a full customized retirement income planning, include personalized Social Security timing report, and review all their financial situation. So give us a call at 833-365-8383.
Misha, thank you so much. To the viewing audience at home, thank you for watching Your Successful Retirement TV. We will see you next week. Be safe, be healthy, be blessed. Thank you.